Assalamu alaikum. Welcome to lecture 14 of AAA, using the work of others. So this is after you collect evidence and do all the audit procedure. Okay. The next one is using the work of other. Here we are going to go through relying on work of the manager's expert, relying on the work of auditor's expert, relying on internal audit, using internal audit to provide direct assistance and service organization. Sometimes auditor needs reliance on others' work. Okay, so who could be those people? It could be the internal auditor, it could be an auditor is using an expert, someone who is expert in that field. Maybe you as an auditor might not be expert in that field. You can take advice from someone who is more expert than you, or manager, the client. Your client might have you can take an expert, okay, from your client, or you can use service organization. Okay, so let's start with the overview. This is the overview of what we are going to cover in this lecture. Sometimes you can use the work of expert. Experts are of two types. One is from management, the other one is the auditor. People like lawyer, because they are very expert with rules. Valuers, the one who puts valuation, they're expert. And actuaries. Okay, this you need like for your insurance or your pension benefit obligation to value, because these are complex areas. For complex areas you need experts. Coming to internal audit. Okay, internal, so you can rely on the work that has already been done by the internal audit, provided it's appropriate for you to form an opinion. Or internal auditor can directly give access assistance to external auditor. Then the service organization. Okay, like some organizations give services like payroll, then for receivables, then for debt, like for debt collection and all, or internal audit. So starting with expert, management's expert. Okay, remember, before relying on any of the advices taken either by management's expert or auditor's expert or internal audit or service organization, auditor should do their work first before relying on them. Like what? We'll see that. What are the things they have to take care of, auditor, before relying on the work of others. Okay, and the way you rely on the work of the management's expert is very similar to the way you rely on the work of an auditor's expert. They're very similar. Okay, here auditor must evaluate. This is very common for whatever whoever work you use, whether it's service organization, whether it is expert, whether it is internal audit. You need to first evaluate as an auditor their competence, their capability, and their objectivity. Very important, because you cannot rely on someone who is not competent. You cannot rely on someone who does not have the capabilities nor objective. They are not independent. Okay, next what you should do is obtain an understanding of their work, whoever it is, expert, internal audit, or service organization. In this case is the expert. You just have to change the word. Okay, it's the same for everything. Third is evaluate the appropriateness of their work. They must have done the work. Now check how appropriate their work is. Can it serve as an audit evidence for you to give an opinion? Now coming to auditor's expert. Okay, here normally auditors use an expert when auditor lacks technical knowledge in some area. Okay, and because they lack technical knowledge, they cannot gather sufficient appropriate evidence. Okay, so in that condition they can take on an expert. But here also, before relying, they have to do all that, evaluating their objectivity, competence, and all those things. Okay, it's the same thing. You see, competence, capability, and objectivity, these three are always repeated. You have to evaluate it. So here examples of circumstances where auditors can rely on the experts work. There are some areas where you have to rely on experts work, some does not require. Areas where it is required, experts work is required, is number one, when you are having a complex transactions like financial instrument. IFRS 9 is a very complex process. There you need an expert's advice. Valuation of land and buildings is quite complex. Work of art, jewelry, intangible assets, because market is not easily available for some intangible assets like your brand. You need experts work. Second, for some calculation, actual calculations like for benefit, employee benefit or insurance contract. Third, for estimation of oil and gas reserves. Interpreting laws, rules, analysis of complex or unusual tax compliance issues. You need an expert. So remember this areas where you need an expert, because in your exam you have to look for those things, whether a transaction is complex or not, whether you need some kind of valuation or not, whether there are some unusual transactions or not, whether there is some interpretation of rules that is needed or not. If it is the case, you need an expert. That's what you have to recommend. Okay, now coming to evaluating competence. The way you evaluate competence objectivity is almost similar. Okay, no matter whatever method you use, whoever you use to rely on. If it's an auditor's expert, this is how you evaluate competence. You see their personal experience. Okay, personal experience of working with the expert. If you have personally worked with that expert before, you must be having some idea how competent they are. Second, you can discuss with them. Third, you can discuss with other auditors, or you can have the knowledge of their qualification, the expert's qualification, or whether they are member of some qualification, some professional body like ACCA, CIMA, CPA. They are published papers or books, okay, the experts, and the audit firm's quality control procedure. Through this, you can evaluate their competence. Coming to evaluating objectivity, make inquiries with your client, whether they have any relationship with the expert. Next, make sure whether there are any safeguards in the entity or not. Okay, if you're working with the expert, there should be some applicable safeguard for it. Third, make sure that they don't have any personal or financial or business interest in your client. Because if they have, then their independence, their objectivity will be impaired. Obtain a written representation from the expert. Now coming to agreeing the work. Okay, let's say all the above matter has been done. Okay, you have came to a conclusion they are objective as well as competent. Now you are agreeing the work with the expert. Okay, so when you are agreeing the work, it's like an agreement, written agreement. Okay, and it will include these things in the agreement. Number one, what would be the nature, scope, and the objective of the expert's work? Two, roles and responsibilities of both the auditor and the expert. The nature, time, and extent of communication between two parties. What is the need? The need for expert to observe confidentiality. Okay, whatever the during this relationship, whatever the information is transferred from external auditor to an expert, experts need to make sure they are the information is kept confidential. Okay, they do not share this information to a third party. Now evaluating the work. Once it is done, they have agreed the work is over. Now comes the reviewing stage where you need to review the work of the experts. You just cannot use the expert work and use it. No, you have to evaluate their work, whether it is up to the standard or not, whether you can use it or not. Okay, so here you have to see the reasonableness, how reasonable is their finding, and whether it is consistent with the other evidence that you have collected. Second, the assumption that they have used, whether it is reasonable and relevance. Then source data that they have used, is it reliable, is it accurate, is it complete? Coming to referencing to the work of an expert. Okay, remember, even if you're using an expert's work, you cannot dump your responsibility of forming an audit opinion to the expert. It's your responsibility still to give an audit opinion, and still you have to use a judgment. Professional judgment needs to be used, how much of experts work you can rely on. Okay, next, when you are using experts work, it should not be mentioned in the auditor's report unless the law says so. Okay, but you can refer. Okay, you can make a note in the report, auditor's report, that you have used the expert's work if modified opinion is given. just in case you think it's relevant, that why opinion was modified. For that purpose, you can include the reference to the work of an expert. Otherwise, it's not mentioned usually. Okay, but still remember, to give opinion, it is the auditor's responsibility. Okay. Next, relying on internal audit. Now we are moving on to internal audit from expert. Internal audit is a part of a internal control, your client's system of internal control. Okay. So if you are having a sound internal control, a sound internal audit, remember, it reduces control risk. It is also good for the external auditor. Why? Because it reduces their need also to perform detailed substantive testing. Okay, and additionally, you can even cooperate with the internal auditor, right? Now, but here also is the same thing, like how we have done for experts. Before relying on the work, you have to see how effective the internal audit function is. Okay, this is how you do that. Number one, you see the extent of their function to the organization status, and whether there are procedures in the company, in your client, to support objectivity. Because internal auditors are what are they? Are simply employees of the company, so it's very unlikely they would be objective. But if there are procedures in the place that says that objectivity of the internal auditors are taken care of, you can rely on them. Next, competence. You need to check whether there is a disciplined and a systematic approach to quality control. Now, evaluating objectivity. This is how you do that for internal auditor. You make sure that internal auditor can communicate with someone. That someone is those charged with governance. Okay. Next, internal audit is free from other operational responsibility. Because if they are not free from operational responsibility, it's like they are reviewing their own work. Okay. Third, you have to make sure whether those charged with corporate governance are responsible for remuneration. Okay. Then make sure whether there are any constraints placed on the internal function or not. If there are constraints placed on the internal function by management or those charged with governance, it is going to affect your quality. And whether internal auditors are member of some professional body like ACCA, CIMA, CPA, like that. Why? Because if they are part of a professional body, they will automatically comply with ethical requirements. Okay. Evaluating competence of internal auditor. Okay. Make sure that the resources of the internal audit function are aligning with the size and the nature of the operation of the company, of your client. And also, there are some policies in how you hire, train, and assign the internal auditor to their job. Third, whether internal auditors have their training, whether they have the experience and professional qualifications. Fourth, whether internal auditor has the knowledge of the applicable financial reporting framework. Okay. And whether they are members of a professional body which requires continued professional development. That means you are up to date. Now, how do you evaluate systematic and disciplined approach? There are two ways. Number one, you see whether there are audit procedures. Okay. Existence, education, the use of internal audit procedures and guidance. Okay. Second, application of quality control policy. How are you applying quality control? Such as those in ISQM. ISQM stands for International Standard of Quality Management. Okay. Next, evaluating the work. After evaluating their objectivity and competent, and you came to a conclusion, you can use their work. You have to evaluate their work now. Okay. You have to see whether you have properly planned, performed, supervised, and reviewed and documented their work. Next, sufficient appropriate evidence has been obtained or not. The main purpose of relying on anyone, internal auditor, service organization, expert, is to gather sufficient appropriate evidence. Then, conclusion. After that, whether you have reached the appropriate conclusion or not. Okay, I mean in this case whether they have reached appropriate conclusion or not. Next, report. Reports prepared are consistent with the work performed. Now, evaluating internal audit work, there are more. Okay, sometimes external auditor has to re-perform some of the procedures done by the internal auditor. Okay, why? This is to make sure that you and the internal auditor are reaching the same conclusion. There is not a difference. Okay, and remember the extent of how much you can how much work needs to be done on the internal auditor's work depends on again your professional judgment and also the risk of material misstatement in that area. For example, some area has a high risk of material misstatement like financial instrument, benefit defined benefit obligation. On this area you need to check the internal auditor's work more than other simple areas. Okay, next, when you're reviewing and reperforming internal auditor's work, you have to see whether the initial expectation of using that work is still valid or not. Okay, now remember, note that auditor is not required to rely on the work of internal audit. You are not required that you have to rely on the internal audit. Okay, in some jurisdictions it is even prohibited also that you cannot rely on internal audit. Okay, same here, responsibility of forming an audit opinion cannot be transferred to internal auditor, and you should not make a reference in your auditor's report also. Now, using internal audit to provide direct assistance, directly they are helping you. Okay, some rules and regulations it is prohibited, but where it is prohibited you have to see their competence and objectivity of the internal auditor. Okay, next, external auditor must not assign work to the internal auditor which involves significant judgment and high risk of material misstatement. Remember, areas where significant judgment is used or high risk of material misstatement should lie with the external auditor only. There you cannot use internal auditor because external auditor are more experienced, they have more competence, they are more objective than internal auditor. That's why. And also in areas where internal auditor has been involved. Okay, you cannot take their help in those areas because then they will not be objective. Then all this work, the planned work must be communicated to those charged with governance. That means you are using internal auditor. This has to be communicated to those charged with governance. And you should not excessively use internal auditor, only up to a certain extent. Because you cannot run away from your responsibility saying internal auditor will do all the work and you will just rely. No, you have to do your own work also. Now, once it is agreed that internal auditor can give direct assistance, okay, you have to get a writing from the management saying that managers are not going to get involved in the work of the internal auditor. Okay, they will let the internal auditor to directly assist external auditor and management will not interfere. Next, internal auditor is also going to give writing in confirmation. Okay, they are going to confirm in writing that information that they have got will be confidential. Okay, external auditor's information will be confidential. External auditor is going to give the direction, supervision and review of the internal auditor's work. And during this period, direction, supervision and review, external auditor should still remain alert that there could be a risk that internal auditor might not be objective or competent. Okay, you have to keep your eyes open. Now, documentation. Yes, you have to document. All this needs to be documented. How you have evaluated internal auditor's objectivity and competence. Keep it in document, not verbally. Next, the basis for decision regarding nature and extent of the work performed by internal auditor. How did you decide it? Document. Name of the reviewer and the extent of the review of the internal audit's work. Document. Written agreement of the management mentioned above. Document. And working papers produced by the internal auditor. Document. Next, so the last one is service organization. Some companies use service organizations, like some basic functions which usually in your company it could be performed in-house. What do? They get it done by another organization, which gives the services to not just your firm but almost any firm. One is payroll processing. So there could be organizations which are expert in payroll processing. They give this kind of services to almost any organization. Payroll processing or receivable collection. Okay. So in this case, even pension management. So when a company uses a service organization, they give this kind of services. What happens? Now when you're collecting audit evidence, you also need service organization. Okay. You have to obtain audit evidence from service organization as well now, in addition to your client. How do you plan audit in service organization? You obtain an understanding of service organization so that you know the risk of material misstatement. Next, you design and perform audit procedures responsive to the risk. Third, so this requires auditor to obtain an understanding of the service provided. Okay, you need to know what is the nature of the service and how this can affect on internal control. What is the nature and the materiality of the transaction to the entity? The level of transaction between the activity of service and your entity, and nature of relationship between the service organization and entity, like contractual term. So now when you are using service organization, following issues has to be considered. Okay, because when you're using service organization, it will have an impact on the assessment of your risk. Like, what is the reputation of the service organization? If it has a good reputation, the risk of material misstatement for the client will be less, because that service organization's reputation is going to have an impact on you, on the entity, on your client. That's why. Next, existence of external supervision. Someone should be there externally to supervise. Third, control. Are there controls in the service organization? What is your experience of error and omission with the service organization? And degree of monitoring by the user. Now, there are two types of report. When you're working with a service organization, two types of report are there. Type 1 and type 2. Okay, we'll shortly go through them, each one of them, what it means. You will understand. Okay. And this reports, whether type 1 or type 2, are prepared in accordance with ISAE 3402. That means it's like an assurance report on this service organization, okay, on the control of the service organization. They say whether the control is sound or not based on that report. It's like giving a reasonable assurance, like whether the system of the service organization is working fairly or not, okay, whether they are suitably designed or not, whether controls are operating effectively or not, and they finally report on those. Now, second, Okay, so we are back. These are sources of information about service organization. Okay, first one is the two reports, type 1 or type 2. Second, you can contact the service organization through your client, or you personally could go and visit the service organization and perform procedures there. And fourth one is use another auditor to perform procedures about controls in the service organization. Now, type 1 is, it is basically a description of the design of the controls at service organization, and this report is prepared by the management. It also includes a report by the service auditor, that means auditor in the service organization, providing an opinion on that description of the description and the suitability of the control. Type 2, it's a little more vast compared to type 1. It is a report on the description, design, and operating effectiveness of control, and this is also prepared by management. Okay, but it also includes a report by the service auditor giving an opinion on that description, suitability, and effectiveness of controls, and it also has a description of test of controls performed by the auditor. So if the auditor is intending to use the report from the service auditor, they should consider these things. Number one, what is the competence and the independence of the service organization's auditor? You see, this is repeated. Whether you use internal auditor, whether you use management expert, whether you use auditor's expert, you need to check their competence and objectivity. This is very common. Second, standard under which the report was prepared. Now, let's say controls are expected to operate effectively. Okay. Now, how we are responding to the risk? This is how we do that. You obtain a type 2 report if it's available, and consider this thing: the date, whether the date covered by the report is appropriate for the audit. Sometimes it happens that the date that is covered by the report is something else and you are auditing for another period. If they are not matching, you cannot use that report. That's why you have to check the date. Third, whether the client has any complementary control in place. If they have, it's good. Third, the time lapsed since the test of control was performed, and whether the test of control performed by the auditor are relevant to the financial statement assertion. You can perform test of control at service organization, use another auditor to perform those tests, and auditor should inquire of the client about service organization, whether they have reported any fraud or not, or are they aware of any fraud, non-compliance, or uncorrected misstatement. Why? Because this affects the financial statement of the entity also. What is the impact of service organization on the auditor's report? If you are not able to acquire sufficient appropriate evidence, you have to give a disclaimer or qualified opinion. Okay. So in your report, the use of service organization will not be mentioned. Okay. But if you have given modified opinion and you think it's relevant to understand why modified opinion, you can make a reference in the report, reference to the work of service organization. But again, responsibility of forming audit opinion is up to you. What are the benefits to the audit? Number one is independence. Remember, service organization, they are more independent of the client. They are external to the client. Because they are external to the client, the evidence that you get from them will be more reliable than evidence getting from client. Second, competence. See, service organization, they are specialists in what they do, whether payroll service or receivable or whatever. So, because they are specialists, they'll be more competent in their work, which means they are less likely to make any error and all. Third is you can possibly rely on their auditor, service organization's auditor. Okay, you can directly get the information from the service organization's auditor. Drawbacks is, see, you as an auditor, you have rights over the records and information of your client. No one can stop you from that. Okay, but over the service organization, you do not have that right. You do not have that access because they are third party to you. So because you do not have access, sometimes this could be a limitation on the scope of your audit work. So because of that, you might not be able to form sufficient, you might not get sufficient appropriate evidence. That means you cannot form a audit opinion. Okay, so you have to give a modified audit opinion. So that's it for this lecture. Let's summarize before we do one question on this topic. Using work of other, you could use auditor's expert, internal audit, service organization. And remember, whether it is expert, internal audit, or a service organization, they must be competent and objective. You as an auditor needs to check it. And how it is done is explained in all the three. And when you're using them, you should not make a reference of them in your auditor's report. So now before we end this lecture, it's almost end. Let's do one question. So in this question, there are two requirements, each for 5 marks. First one is you are supposed to put reliance on the work of expert. So when you're doing it, describe the factor that the company should consider. 5 marks. Next one is design audit procedure for auditing of revalued properties. So it's about revaluation property. We'll see what type of property is it. Is it non-current asset or intangible or investment property? So here you are supposed to audit a company which has a financial year end 31st December 2005. And in April 2005, that means in the year, you have gone for a revaluation, property revaluation, done by an independent expert. So by 31st December 2005, they have used this valuation in their financial statement. So now, let's see the factor that you need to consider when you're putting reliance on the expert. We have went through it. So because it's 5 marks, this will tell you how many points. You have to write 5 points here. And here when you're designing audit procedure, 5 audit procedure you need to write to get the 5 marks. Okay, so let's do that. Now for A, tell me, what are the factors you need to rely on? Just now we went through it. When you're using expert, evaluate competence. You have to evaluate their competence and objectivity of the expert. These are the things we went through, right? Next, first is competence and objectivity. Next paragraph you have to explain. See, each paragraph 1 point. Okay, next, what would be next? How can you check the, this is basic. Okay, basically now you will say how you evaluate competence and objectivity. So how do you do that? When you want to test the objectivity, you can say whether they have any qualification or not, professional qualification. This will tell them whether they're objective or not. Okay, so you can check their professional qualifications, then qualification of the person who is performing this valuation. or whether they are members of any board. It's the same thing. Then what's next? You can meet with the expert. Okay, auditor could meet with the expert and discuss their relevant expertise, whether they have done it in the past or not, whether they have valued a similar property. Okay, and also you have to consider whether they have understanding of IS 16 or not. This is the standard. Next, when you're checking the when you're checking the objectivity, you also have to make sure whether there are any threats, such as threats to independence. How? Whether you are having an undue reliance on the company, right? Or whether there is any self-interest regarding share ownership in the company. So all this you could explain. And then you have to evaluate the valuation. That means whatever the assumption used when you're valuing, you have to review it and you have to compare this with the previous revaluation of the company. Mention the name of the company. Okay. Metamorphic company. Now coming to B, audit procedure for revaluation. Be very specific because they have talked about revaluation only. Don't use general audit procedure. So what could it be? I told you yesterday, okay, in my previous lecture, that when you are talking about audit procedure, three things: evidence, source of evidence, assertion that you're testing, and what's next? Assertion, evidence, and the audit procedure. An audit procedure has words like review, inspect, observe, inquiry, analytical procedure. All this are words. It's like an action you're telling them what to do. Okay. So tell me, for valuation, what is the evidence source? Which place valuation report? Valuation report could be the first thing. So inspect, valuation report. Okay. When you're valuing, there should be some valuation report. So you can inspect that report to do what? To do something, no? You just don't write inspect valuation report and full stop. No. And agree the valuation of each property. When you're valuing property, make sure that you agree the valuation of each property to what is there in the asset register. Because in your asset register, all the valuation of the property will be there. You have to make sure it's going in line with what you have done. Next, this is regarding valuation of the property, right? And remember the date. It was done on April and your year end is 31st December. So you have to make sure until that date it is appropriate. So you have to review. That's what you're writing. Review property values because revaluation was done on April. Year end is 31st December. Some time have passed, right? So revalue property value as at 31st December 2005 to see if valuations from April 2005 are still appropriate or whether valuation changed. That's what you have to test. Third, see, this is Valuation of what? Non-current asset. I told you when you are having valuation or even cost model for value for non-current asset will have a depreciation. So now calculate the depreciation, because you must have calculated the depreciation based on estimate. So whenever estimation is used, you calculate it. So calculate an estimate of depreciation. Okay, calculate an estimate of depreciation which should have been charged from April to December. April to December. To assess whether there could be material misstatement to properties or not. This could be a material misstatement. Why? Because this is estimation. Wherever estimation is there, estimates are there, chances of material misstatement taking place there is more. Okay. Then with standard IS 16. So you can review financial statement disclosure. I'm using FS, the short form, okay? But you don't use it. Review their disclosure to see whether they are complying with IS 16 or not. I'm not writing the full sentence. You can write it. It's there in the answer. Read it. This is only for your explanation. How we came to that answer. So when they are following the revaluation rule according to IS 16, whether they are complying with that or not. That's why you are reviewing the financial statement disclosure. Because in the disclosure, they will write assumptions used to revalue, how they have done the revaluation. That's why. Then, if you are using an auditor's expert, most likely valuations and all, you are using an expert. So use if necessary. That is also if necessary. Not all the time you need work of someone. So if necessary, use the work of an expert. Okay. It could be auditor's expert to confirm valuation of the management's expert. Are appropriate or not. You have used management's expert. Now use auditor's expert to confirm the value of the management's expert. So thank you for watching, and I shall see you in the next lecture. The next lecture is a very interesting lecture and a big lecture and a very important lecture, because it has a lot of technical areas that you need to work on. That is group accounts, like group audit and transnational audit. And the good news is that's the last topic under your section D of the syllabus, that is audit of financial information. Because after that we are moving on to section E of the syllabus, which is subsequent review and subsequent event. And don't forget to subscribe to my channel if you haven't subscribed, and please go and check my playlist out for all the previous lecture of AAA. And not just AAA, I have also SBL, SBR and AFM full lecture. You can go and check them out too. Till then, take care and see you in the next lecture.